Looking to a new government in due course, what are some of your high hopes for the new government, whichever party happens to be leading it?
Well, I think, as you'd expect me to say as a banker, managing the country's finances well, continuing to maintain budget surpluses, I think is really important, because the lower the debt we have as a country, the more flexibility we have during inevitable downturns and crises. So I think sensible management of the budget is really important. I think that the things that are really important, I think, for this country in the future, one is investing in infrastructure. And you can see that anywhere you look around Auckland. Auckland's creaking in some ways in roading and other infrastructure. So continuing investment in where the infrastructure is needed to support the growth of the population is absolutely essential. I think the second is continuing to invest in education, which is vital for our future. Now, the needs of education, or at least the things that are important from an education perspective, are changing with technology and digital. So the education sector, both primary, secondary and tertiary, will have to keep adapting to feed those emerging skill needs, because today I've often heard that saying about, you know, a large percentage of the jobs that our children will do in the future don't exist today. But we do know the sort of capabilities and skills they're going to need. So investing in those emerging skills and skills of high demand is important through secondary and tertiary sector. So education, continuing to invest there. And I think continuing to make sure that we're investing in the social fabric of New Zealand. And you know, the national government's talked a lot about their social investment approach, and that's you know, been looked at around the world as quite you know, leading practice. And I think if National get back in, I'd encourage them to keep going in that reform. We still have too many people that can't afford a home, or homeless people, or big gaps between rich and poor. And I think continuing to address those needs in our society are absolutely vital. And finally, I would encourage either side of politics to look at tax reform, because I'm not necessarily advocating more tax overall, but I do think that the shape of our tax system needs to be looked at, and particularly when you consider some of the widening gaps between rich and poor. When you've had a decade of high liquidity and asset price bubbles, those that have assets and those that don't have assets, that's where the biggest gap between rich and poor is emerging, and you can read that in Piketty's book and other places. So I think addressing that through redistribution, particularly with a capital gains tax, would certainly be something I'd like both governments to be considering.
One of the biggest areas the new government has to address is our transition to a low carbon economy. Is BNZ in favour of a climate commission or committee to set those long-term carbon reduction goals?
Well, I think a climate commission makes sense, and it is one solution that's been put forward by the Parliamentary Environment Commissioner for the Environment, Jan Ryan, who's I'm meeting with later today to get a bit more of her perspective on that. But I do think that could work. I think what our customers need, when you look across particularly agriculture, is they need certainty. So they need to understand, have a predictable framework so that to see what the pathway is to meet our Paris climate commitments. And to do that, you need a framework, and you need predictability, and you need rules, and a climate commission could help set that framework. And if that was to come to pass, that would give the certainty that our customers need to think about, well, how do I need to adjust my practices or my operating model to meet those rules or requirements over time. So like Environment Canterbury, for instance, we've had a lot to do with thinking through the sustainable management of irrigation and agriculture in Canterbury. So I think our approach has been to engage with those that have a strong view, or those that have some statutory responsibility for it, and work out how we translate their requirements through to what we can do to support our clients.
Are there some new financial products coming through for the construction industry, or different kinds of financial product? Is there innovation in that area?
Yeah, I think there is a little bit. You're seeing some foreign companies come in that are bringing finance and construction capability. There's some Chinese companies that have come in and doing that, and they're financing their own projects, and they're obviously constructing them and then selling to the end market. You're seeing a little bit more split between land ownership, dwelling ownership, between developers and constructors, and there's been some land banking that's coming on stream. And I think you've seen some second-tier financing companies, some that are prepared to put equity in and mezzanine finance back in the market, funding the riskier, I guess, slices of that debt funding. In terms of products themselves, one of the things that's always been a challenge for small to medium enterprises and small businesses in particular is lack of capital. Usually, traditionally, banks have had to lend against a house for a small business customer, or they've drawn on their mortgage. What we've tried to do is target some newer products at the sort of funding needs of our customers as they grow. So our asset finance products, our invoice finance products is about helping customers fund their growth in a working capital cycle without asking for security. So the invoice finance product in particular for small growth businesses is terrific. For small businesses that are growing at a high rate is terrific because they're building up debtors. We can fund against those, and that's a working capital cycle that we can continue to fund rather than saying you have to borrow against your house to fund the growth of your business. So that's been very successful for us.
Very specifically on that invoice finance, if a company has sent an invoice and might be waiting a month or 6 weeks or so for payment, how soon can they come and get some money from you against that invoice?
Well, they get it as soon as they've issued the invoice.
All right.
So what you're really doing is accelerating their cash flows. So if I sell something to you and you've got 90 days to pay, the bank can fund that debtor straight away, and then effectively the flow from the debtor is paying back the funding we've already lent you. So you're accelerating your cash flows. Particularly for businesses dealing with big corporates like Foodstuffs or Progressive, the big supermarkets, they'll have extended terms for payment, but they're blue chip debtors, so it's very easier for us to fund against those debts.
And that's a highly automated system once you got it up and running.
Correct.
And what's the typical cost to a company for using that facility?
Oh, look, you pay a fee on invoices, and it works out to be much more cost effective than an overdraft, but slightly more than a straight. It's more expensive than a housing loan, but actually what we find is customers, the most important thing to them is flexibility and the ability to continue to fund their growth. It's very hard to do that with a housing loan or with an overdraft that you keep having to go back to the bank and get increased limits all the time. With an invoice financing product, it's cheaper than an overdraft, and you can continue to grow the facility as your debtors grow rather than having to get more assets or security to fund that growth.
Another area of disruption is in KiwiSaver funds with some entries of low-cost providers. What impact are they having so far?
All of the main providers have been relatively lean and low cost in how they brought their products to market. Now, there are alternatives that have come in that are not for profit at lower cost again, and that will force us all to look at our economics. Some of these are startups. They've got very bold ambitions, and we've got to see whether they end up offering relevancy to customers. They're certainly growing. We're continuing to see incredible growth in our KiwiSaver funds, more and more customers. But I think the biggest challenge for New Zealand in the retirement and savings space is engagement. Because what we find today is far too many customers are still in passive funds or in cash and fixed interest. They're not engaging enough with their savings and retirement to think about the investment choices they're making. So we're investing a lot of time and effort, and I know the FMA is very focused on this. How do you have more engagement with and more dialogue with your customers around how they invest their funds to plan for the future? So one of the things we did is if you're on our digital banking platform, you can also see your KiwiSaver and engage in effect with how it's growing over time. Our financial advisors and the communication we're increasingly having with our customers about wanting to encourage them to think more and more about their retirement and savings.
Lastly, you've got two well-known economists prized for their strong views and good analysis, Stephen Topless and Tony Alexander. They on occasions do upset some people with their analysis. Do they have freedom to speak independently of the bank? And then how do you respond as chief executive to that and the fallout that can happen?
Well, you're right. They are both widely respected for their views and their analysis. And the most important thing to me is their independence. We guard that jealously. We don't seek to interfere in any form of editorial independence. And I want them to continue to offer their robust, independent, well thought out views. Now, from time to time, someone will not like what they say. And frankly, my view sometimes is if if you're not upsetting someone, you're probably not trying hard enough, because we have a country of 4.5 million people. We don't all agree with each other. So part of their mandate is to push thinking and to force us as a country to think differently about how we grow and secure our future. And I think they both do that excellently, but the overwhelming feedback I get is very positive. Now, from time to time, someone will get upset, and if they're upset enough, they might write to me or contact me or tweet about it. And of course, I don't always agree with everything Tony or Stephen says. The only engagement I ever have with them is if I get feedback that I think they should take on board about how they might have said something, or whether they've should check some other facts or take a second look at something. And I never force them to do anything. I say, look, here's the feedback I've had. You should think about this and make your own mind up about how you respond. And that's always been the way we've operated, and that'll always be the way we will operate.